Good afternoon, it's Quant Trade Edge, and this is a special update on Netflix. Hopefully learning what I can show you here can save you a lot of money in trying to catch falling knives. In addition to just don't catch falling knives, I can give you a little bit of guidance based on the structure that we've learned on how and when it's appropriate to take a stab. And so the first thing I wanted to show you is Netflix closed at 348.61, and this is a 1 minute chart. If we blow this back to the daily, you'll recognize this gap. And these little lines that I've put in are significant. I'll tell you what they mean. Based on this close, the at-the-money straddle was $38.70. That means the at-the-money call plus the at-the-money put. And that level is here. Now, typically on a gap, if you open below here, you're going to continue lower. And most stocks stop at around 2 times the straddle. If you gap down more than 2 straddles, this is a very special and unique situation. It happens maybe 4 times per earnings season on weekly stocks that I keep an eye on. And that's typically a pretty powerful situation to keep moving lower. And so as we gap down that low, that is what we kept doing. From 8:30 all the way down to 9:10 for about 40 minutes. We went from as high as 248 down to 212. So about $36 of movement here. Now, people have different time frames. For example, if you're an investor, perhaps you're looking to buy some for the long run, and maybe you bought it at the open. Maybe you bought it in pre-market yesterday at 270 or 280. Maybe you took a stab here. Maybe you took a stab here. What I want to show you is how to avoid doing that and when is the earliest you can take your first stab. So to do that, let's put our Gann counter on and look at the structure. And this is just the 1 minute chart. And I'll blow it up real big. It's a good lesson on bar counting with an exciting example, something that's actually moving today. And you'll see that we got one little push up. So if this were the open, we had this little wave up, this wave down, a one-legged wave up, wave down, one-legged wave up, wave down, one-legged wave up, wave down. And then down at the bottom, we had this little inside pattern, and we switched to a wave up. And, again, with this wave up, we don't know that it's any different than this wave up, other than, I guess, you only really got 1, 1, 2, 1, 1, very brief pops up. So this was like a lot of selling pressure. And then the fact that we started getting a few could tell you that, okay, maybe that selling pressure's temporarily gone away. But the real thing here is, let's do our structure, our U-turn structure. There's an A, B, C, and the earliest attempt that you should make to buy this, that would not be catching a falling knife, would be to buy at the 1 minute U-turn. And you could very reasonably use a stop, like this last this last little wave down, or perhaps a little bigger, this wave down, and you'll see that you did get some more upside, and the eventual lows did tick below this stop, but not this stop here, and then we continued up a little bit, and then we're starting to turn back around right now. This hopefully can help you avoid catching a falling knife in that $36 direct drop. And then off the lows, we didn't get this opportunity until about $8 or $9 off the lows, but that's the price you pay to not get stuck, holding the bag on $20, $30 of move. Again, our goal is not so much to catch the lowest price, but it's to buy at a price after which you will not suffer a drawdown. That's the difference between trading and investing. If you're trading, drawdowns are key. You use leverage. You want to be right. If you're investing, then perhaps your goal is to get the absolute lowest price. But even then, I would argue, how would you know that was it versus any of these other times you could have tried? And one more thing here, which shows us clearly the one exception to the bar counting rule that we have so far discounted, just because it's not worth it. We don't see it very often. Well, we did see it today in NFLX, and that is looking at the 5-minute chart. And let me remove all of these lines here. On the 5-minute chart, we had this one wave up, one wave down. Now this is an outside bar to this, so it is technically a down wave. But if you remember, the higher high, higher low is easy to program. Lower low, lower high is easy to program. That's a down bar. That one's an up bar. Inside is easy. It's going to be strictly inside, and it takes the label of the previous bar. It's only the outside bars that are a little more complex. And in this situation, because the outside bar did make a higher high to the previous swing high, it's actually an up bar. So I don't have that program. That's just such a nuance that I don't know how to program it. I just visually pick those out, kind of like I do with the hoagies. And so this became your 5-minute ABC up on NFLX on the 5-minute. So after that, you can see that we just hit the 5-minute U-turn, and that doesn't mean we have to go a lot higher from here, but that is a significant occurrence to hit that U-turn. Sometimes U-turns just do that. They just barely pop up, leave a trap, fall back. If you have other reasons to want to own this, or if you have other technicals that tell you that it may be going higher, again, that's a reasonable spot to take a stab when you get this 5-minute U-turn. But the key takeaway here is, don't catch a falling knife. Wait for the structure to give you something that helps you have a risk point, against it. And the other thing I would say is, this is a great example of the one exception in bar counting that we have not really addressed yet, because I just believe it's a lot more work than it's worth relative to how infrequently it shows up. So anyway, hope that helps. Hope you've been on the right side of this, and hit that like button and subscribe, and leave me a comment, and let me know if you have any specific questions.